Hello and welcome to CIA News Analysis. Tomorrow's crypto news today. Well, how about it? Bitcoin moving forward with great momentum today. And we're going to start off a little bit different in this episode. We're actually going to do some chart technical analysis. And what we see here is the 2-year time frame of Bitcoin. And we see the original cryptonomic cycle back here from the second halving of Bitcoin. And then we see the crash and the bounce, and then we see the actual bear market come into play here. And when the purple line that we see here is called the 200-day exponential moving average, and the brown line that we see is the 250-day simple moving average. And we can see here at the beginning of the last cryptonomic cycle, the exponential moving average was able to cross over the simple moving average. And when we went into a bear market, the exponential moving average again crossed the simple moving average, and from that point acted as a resistance level, pushing down Bitcoin. And it wasn't until just a couple days ago that Bitcoin convincingly broke through the 200-day exponential moving average as well as the 250-day simple moving average. And we'll zoom in and take a closer look at that in a second. But the other thing I want you to pay attention to is that the RSI, which is a momentum oscillator, it just tells you if things are overbought or oversold. When it's over 70, it's said to be overbought. And when it's below 30, it's said to be oversold. Well, you can see during the last cryptonomic cycle that Bitcoin was overbought a couple of times, but that didn't stop it from reaching new highs. And during the process of setting that new low, Bitcoin actually became oversold, and for the first time since the last cryptonomic cycle, we've seen an aggressive move above the 70 level to those overbought levels. Now, zooming out from the 2-year period and into the 1-year period, where we're going to be able to focus more on the crossover of the moving averages, you'll be able to see here that this here is the time that the 200-day exponential moving average actually crossed over the 250-day simple moving average, and that's when all hope was lost of a recovery. You can see Bitcoin was about $10,000 before it crashed down, and that moving average came below the simple moving average. And if Bitcoin came up near it, it came immediately down. Came near it, came immediately down. And this is where we traded sideways at the $6,000 to $6,200 level. And it couldn't get back up towards that exponential moving average, and that resulted in capitulation here. So just to sync this with the psychology of the market chart, we're going to take a sneak peek at the Cryptonomics members only section. And we can see here that you are here. And we see capitulation right here. I'm getting out of the markets. I can't afford to lose anymore. So when we were at 6,000 to 6,200, that's when we went from capitulation and dropped all the way down to the 3,000s. And you can see it drops down, it bounces up, and then it drops down and sets that low. And then what's it do from there? It bounces up again. But what do we see as we go from anger to depression? We do see the possibility of a new lower low coming in before you go into disbelief and then into hope and then into a whole nother cryptonomic cycle. So let's just take this and sync it up with the chart that we have here, and we'll zoom into the 6-month period where we can still see the capitulation from the 6,200 all the way down, a little bit of a bounce, and the low. Come back over here. We have capitulation comes down, a little bit of a bounce, and the low. And then from there you have a little positive momentum moving forward until it dies off. And basically it's a fake disbelief. Oh, this is a sucker's rally. It broke through the 200-day exponential moving average. It was also able to break through the 250-day simple moving average. Now the key is over the next couple of days to maintain these levels in order for this to be healthy growth. And what we do want to keep in mind is that whether Bitcoin goes up or down, we want to maintain our strategy and we want to maintain our mindset. Remember, our mindset is long term and our strategy is dollar cost accumulation. So we don't want to be buying Bitcoin on double-digit green days. We want to buy Bitcoin on the red days. But you can feel with the momentum of the market, the psychology of the market, the power of that psychology. When things start to move forward fast, you get FOMO, or fear of missing out. And you want to hop in, you want to buy it, you want it to move forward. But what we do have to realize, and we can see that here on the Cryptonomics page, is that Bitcoin still has 416 days until its halving. And if we come down a little bit lower for a little bit more of a sneak peek, we can see that the 180 days to halving is on November 25th, 2019. That is when the data shows that the market really starts to turn around and that the bear market really starts to turn into a bull market. So using that data and then posting it onto these charts, we would be safe to say that sometime around here, this would be that November time frame when a potential lowest low could come in of the bear market cycle. And then that 6-month period, the miners who are selling Bitcoin, who are getting awarded 12.5 Bitcoin per block, they start to price in the inflation rate adjustment. They start to price in the fact that, hey, in 6 months, we're only going to be getting 6.25 Bitcoin per block, not 12.5. And that's really what starts to drive up the price in a way that's not really based on momentum or FOMO, but actually based on economic supply and demand. So could Bitcoin exceed expectations and not set a new low over the next 7 months? Yeah, absolutely. And that would be a great thing. And for CIA members with the long-term mindset and a dollar cost averaging strategy, we don't really care. We're going to wait for those red days, and we're going to buy on the red days. And when push comes to shove and we're going into this third cryptonomics cycle, you're going to have the best dollar cost average rather than trying to pick the bottom or play the momentum. This is the best strategy to accumulate Bitcoin. And if Bitcoin exceeds expectations on the low side, that's a fantastic thing, because that means that most likely it's going to exceed expectations on the high side. And we know that the expectation for the next cryptonomics euphoria stage is anywhere between 90,000 and 140,000. So if we can exceed that low side, then we'll definitely be hoping to exceed that on the high side as well, which of course means better return on investment for members who have been able to successfully maintain that mindset and strategy of long-term and dollar cost average accumulation. Now hopping back here to the Bitcoin chart, we'll do a little bit more of a zoom in here. We'll go to the 3-month period, and we'll be able to see that Bitcoin was steadily growing, and now it was able to break through that 200-day exponential moving average as well as the 250-day simple moving average. But what we really want to see to confirm a bear market to bull market change is we want to see this 200-day exponential moving average line be pushed above the 250-day simple moving average. And we probably won't see that until we're able to get back up to the pre-capitulation phase. So we'll zoom out here to 6 months where we can see we were at 6,000 to 6,200. And we're going to need to break through that level to bring this exponential moving average up above the simple moving average. And this is very technical, I know, but just follow with me. These are key performance indicators that we can watch for to confirm whether or not we're going from a bear to a bull versus just looking at momentum and price points. And if we go back to this chart one more time, what we really want to pay attention to is, when do we break back through that capitulation level? Well, if you could just draw a line from here all the way across, you'll see that you don't break through that capitulation level until after you go through this depression cycle. So we need people in the market to not be excited and have FOMO that they're missing out on Bitcoin. We need people to go through this, my retirement money is lost, how can we pay for all this new stuff, I'm an idiot. We need to go through the psychological depression stage of this market cycle before we can get into the disbelief, which is, this is a sucker's rally, which, you know, the bears are saying now, oh, this is a sucker, Bitcoin through 5,000, doesn't matter, it could come back down to 3,000. Well, they're going to be saying that now, and they're going to be saying it over here. And they may be correct right now. Let's hope they're not, and we exceed expectations on the low side and the high side. But they're going to be saying that same thing over here as well. This is just a sucker's rally. And before you know it, you're going to get into hope, and then before you know it, the halving is going to occur, and the whole psychology of the market going from optimism all the way up to euphoria will again take place, and that's when we're going to be able to be having lots of fun within the Bitcoin cycle. So let's keep in mind where we are within the psychology of the market and where Bitcoin is as far as price points go. It's great to see this momentum, but let's keep our strategy and mindset, and let's stay true to what we've been doing for the past 4 years, which is to keep a long-term mindset and to have a dollar cost averaging accumulation strategy. That's where we stand within Bitcoin and the market cycle, and we want to keep that in mind as we dollar cost average and not buy on green days. Wait for those red days to accumulate. All right, well, now that we've taken the time to look at a few charts and Bitcoin's recent price action, let's go ahead and move into the news. In our first article, we see the implication of fusing 5G and blockchain. Analysts have been anticipating the implications of the Internet of Things for several years. However, there have been two main impediments to its success: capacity and security. But now, the introduction of a new technology could change that. This year, major carriers like AT&T and Verizon will be introducing 5G, the latest generation of cellular mobile communications. The 5G platform brings a high data rate, reduced latency, energy savings, cost reduction, higher system capacity, and massive device connectivity. The combination of 5G technology and blockchain technology has the potential to unleash a surge of economic value. In order to understand this connection between 5G and blockchain, one must think of the relationship as multifold. The power of 5G coverage through its reduced latency, high speeds, and capacity allows for Internet of Things devices to become widely used. Simultaneously, these devices can leverage security, decentralization, immutability, and consensus arbitration of blockchains as foundational layers. What does that mean? That means that smart cities, driverless vehicles, smart homes, and other sensor-driven enhancements will finally have a technology that can handle their needs. And when we're talking about the Internet of Things applications, here are a few verticals that we can talk about. Smart cities. And you know, in recent CIA news, we've shared that China has already been building smart cities. Smart cars, smart homes, appliances, smart health, smart farming, wearables, and smart TV. These are just a few things that are going to be radically revolutionized over the next couple of years as blockchain, artificial intelligence, and the Internet of Things is applied to everyday life. The article continues, as foundational layers, blockchains can provide consensus and security, while the majority of Internet of Things transactions and contracts occur on second-layer networks, with the opportunity to settle payment channels and transaction disputes on-chain. The network capacity of the Internet of Things, however, will be enabled by the power of 5G coverage. Now, it's important to note that we've gone from 3G to 4G and now to 5G. But the jump from 3G to 4G was not that significant. It was noticeably different, but it's not going to be as significant of a jump from 4G to 5G. 5G is constant communication between internet-connected devices, which we've never had the ability to perform before. Furthermore, 5G will directly assist blockchains by increasing node participation and decentralization, as well as allowing for shorter block times, driving forward on-chain scalability, which of course makes it secure, all of which in turn further supports the Internet of Things economy. Now the question is, when is this going to come into fruition? Well, here's your answer. Network providers have started rolling out 5G within select United States cities, while global coverage is expected to come online in 2020. Wow, isn't that interesting? What else do we know that is going to take place in 2020? Well, it just so happens to be that the Bitcoin block reward halving will take place on May 24th, 2020. That's right, the next cryptonomics cycle will really start to move forward in tandem with the global coverage of 5G. I can already see the FOMO kicking in. We couldn't see it before. We didn't understand Bitcoin before because we didn't understand 5G. We didn't know we were going to have 5G. Of course, we've shared on CIA News that Samsung, Huawei, LG, they're all releasing their 5G phones, and that cell phones are going to play a major role in the mainstreaming of cryptocurrencies. And fancy enough, the next cryptonomic cycle is timed up with global coverage of 5G networks. So we see this technology moving forward at a rapid pace, and the advancements of the technology as well. In the next article, we see Dubai-based crypto firm's new product to allow real-world assets to be tokenized. A crypto company has launched a new product that focuses on the tokenization of real-world assets, such as property, art, and commodities. A venture it believes will transform the way the world invests, trades, and transfers value. Through DGTO, executives hope to increase the liquidity seen in the global real estate market. According to research by the British property firm Savills, the world's real estate was worth a combined total of $280 trillion in 2017, an increase of 6.2% on the year before. Residential properties accounted for most of this record-breaking amount, with commercial and agricultural real estate comprising the rest. That is an unbelievable market, $280 trillion market that has the potential to be digitized. Even if you only get 10% of that market, 28 trillion. Maybe you only get 1% of that market at first, and it's 2.8 trillion. The cryptocurrency market right now is only worth $140 to $160 billion. So to go from 160 billion to 2 trillion to 28 trillion just within asset management and asset digitization is unbelievable, because cryptocurrencies are not only going to revolutionize asset management and digitization, they're going to revolutionize finance as well. So this is just another multiple added to the overall market capitalization of cryptocurrency in the long run. And we see it coming to fruition right now. And not only in real estate and art, but also in commodities. In this article, Russian mining giant to tokenize Palladium. Now we know Palladium recently went on a run because of supply issues and set all-time highs. And this Russian company wants to tokenize Palladium. Russian billionaire Vladimir Putin is planning to create a cryptocurrency token backed by Palladium. Putin, who is CEO of the Russian nickel and palladium mining and smelting company Nornickel, plans to deploy cryptocurrency tokens for trading palladium through a Switzerland-based palladium fund and wants to launch several digital platforms. According to Bloomberg, the platform will enable more fluid transactions. Currently, should a buyer discover that they do not need all the contracted volume in a purchase, they must either renegotiate with the supplier or sit on the excess supply until they find a buyer. However, with a tokenized asset, they could ostensibly sell the excess volume to a third party more easily. So we see asset digitization adds more liquidity to the market, and it optimizes real world assets. And we see asset digitization, something that 99% of people didn't even understand during the last cryptonomics cycle. They were just worried about price points and what Bitcoin was, much less asset digitization. Now, during the bear market, we see companies moving forward aggressively to establish assets that are maintained digitally and protected by the blockchain. As we see the positive momentum in the market and we understand the cryptonomics cycle and the psychology of the market and where we are within that cycle, and we see the implications of 5G coming online, and we see that Dubai-based companies are starting to digitize real estate and art and different commodities, and we see the Russian company is already digitizing Palladium. While all this is going on, what are the banks doing? The banks are still crying wolf, playing the same role that they are meant to play through this entire process. Bank of America tech chief is skeptical on blockchain, even though Bank of America has the most patents for it. Very interesting. Yeah, we're skeptical on blockchain. We don't think this is going to work, but we have the most patents on it, right? Doesn't make any sense. That's because they're liars and they don't want people to know what's coming. Why? Because they're the ones who are financing the ecosystem. They're the ones who are partnering with these Dubai-based companies who want to digitize assets and with these Russian companies that are digitizing Palladium. Where do you think they're getting their financing from? From the banks. And we see in this article that the Bank of America Tech and Operations Chief Kathy Besant has reservations on blockchain, the technology underpinning cryptocurrencies. In my private scoreboard in the closet, I am bearish, she says. Still, the bank has 82 blockchain-related patents, more than any other financial firm, including payment companies MasterCard and PayPal. You are a hypocrite. But I'm not that mad at you because you're just doing your job and you're just doing and saying what you're told to say as the puppet that you are. And the banks have been crying wolf. We've proved it over and over and over throughout many articles we've shared. And how do we know that? Because you have people coming out and saying one thing and then doing another thing. Remember in the previous episode, we said, don't do as the banks say, do as the banks do, which is aggressively investing in blockchain, artificial intelligence, and the Internet of Things. And we see proof of that right here as Ripple Inc. partners with a $19 billion bank with over 8 million customers. Fiat to crypto trading may be illegal in India, but that's not preventing blockchain startups from striking deals with banks under RBI oversight. So in India, it's so bad that their people are not allowed. It's illegal to do cryptocurrencies. We don't want you holding cryptocurrencies. In India, they try to take the gold from their people, and now they're not letting them get cryptocurrencies. But one of the biggest banks in the country is partnering with Ripple, a cryptocurrency company. Very interesting. Can you see the hypocrisy here? Ripple Inc., the global remittance company, has a grand vision of world domination. And part of that is clipping SWIFT. Remember, we covered SWIFT, how it's old and dying, and we have new settlement layers coming to fruition like Ripple and Bitcoin. The SWIFT market share by partnering with banks from all over the world. To that end, the NSE and LSE listed federal bank, which is also a scheduled commercial bank, is the 6th Indian bank to join forces with Ripple Inc. as part of the bank's objective of upgrading their platform. So let's see. Fiat to crypto trading is illegal in India, but 6 Indian banks have joined forces with Ripple. The hypocrisy of the banks has never been so clear, and where the market is going has never been so clear. Let's remember to not get too excited about this momentum here, to keep the mindset and keep the strategy. The mindset is long term. The strategy is to dollar cost accumulate. And let's remember where we are within the cryptonomic cycle. There's still 416 days until the halving, and we're not going to be at this low point until the November timeframe. And hey, if Bitcoin exceeds expectations and we don't see a new low come in, that's perfectly fine, because what's going to happen? We're going to dollar cost average all the way through the process, and we're going to end up with the best price per coin. And of course, we want to see Bitcoin exceed these expectations, just like we see the technology exceeding expectations with the rollout of 5G coming online at the global level in 2020, and different firms already moving forward at a fast, aggressive pace to digitize assets, an idea that most people didn't even understand just a year ago, now coming to fruition in the market. And all the meantime, the banks are crying wolf and not even letting their own people come and trade cryptocurrencies as they strike deals with huge cryptocurrency firms. Well, that's it for CIA News. Thank you for joining us, and thank you for your support.